And now for business news. Tyson Foods has joined the growing list of companies that require COVID vaccination for employees. Plus, the buy now, pay later microloan movement is still shaking up the finance industry. ABC's Bobby Soriano reports.
Good evening. U.S. markets have closed. Here are your latest business headlines. Tyson Foods, the biggest meat supplier in the United States as measured in sales, has announced that it will be requiring all of its employees to be fully vaccinated by November 1st. Based in Arkansas, a state that has struggled to persuade its citizens to get vaccinated, the company itself has only been able to convince about 56,000 of its 120,000 employee workforce to get vaccinated through company events and incentives. But as Delta variant cases continue to rise, particularly in the southern regions of the country, Chief Executive Donnie King believes that mandatory vaccinations will be the best effort at protecting the health of all company employees. Tyson is not the first major company in the U.S. to announce mandatory vaccination. It closely follows the footsteps of other big names such as Morgan Stanley, Google, and Facebook. However, Tyson is the first major frontline company to make the announcement. Meat packing workers were considered essential workers during the pandemic, and thousands of them were infected with COVID-19, with approximately 130 meatpacking workers having died from the disease, according to labor union estimates. Yesterday, digital payments company Square announced its biggest acquisition to date, the $29 billion acquisition of Afterpay. While the amount Square paid is definitely newsworthy, tonight we take a look at how Afterpay and other buy now, pay later companies are looking to revolutionize how everyone borrows money. So what makes companies such as Afterpay different from your traditional lender? Well, the key difference is their specialization in microloans, loans that may only be a few thousand or even hundreds of dollars meant to cover a single purchase. Microloans have been all the rage on the international scene, where they are able to serve communities that are not served by traditional lenders. But it's only recently that microloan companies such as Afterpay are starting to make waves here in the US. Several factors appear to be attributing to their growth. First, the general populace has finally warmed up to digital wallets that cut out the big bank and institutional middleman, thanks to the cryptocurrency craze and peer-to-peer money transfer apps such as Venmo. Second, more and more users are being attracted to microloans for their zero or near zero interest rate plans. Indeed, one of the key marketing lines for Afterpay is the ability for customers to borrow money to make a purchase without having to worry about the usual upfront costs associated with borrowing. So how does Afterpay generate revenue? The hope is that the sheer volume of microloans, which are made conveniently available as a payment option on merchant storefronts, will generate a profit through transaction fees that are charged directly to the retailer. Meanwhile, retailers are willing to pay these fees because microloan companies like Afterpay pay retailers upfront for whatever amount customers borrow. This win-win scenario for both the merchant, who no longer has to worry about customers defaulting on borrowed credit lines, and the customer, who no longer has to deal with high interest rates, is the main driving force in the buy now, pay later movement. Of course, the risk of too many customers not making payments is still there, and now falls squarely in the hands of these microloan companies. But it is their optimistic hope that enough responsible customers use their services to offset any amount of missed payments, and it is the optimism shared by the likes of Square that sees the future of microloans as not just a trend, but the future of the entire borrowing industry. Looking at today's market numbers, all indices saw a sharp rebound from the recent days as they all closed in the green near all-time highs. Reporting from New York, Bobby Soriano, Eagle News. We live in interesting times.